Good afternoon, and thank you for joining us today. My name is David Talbot. I am head of research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We will hear from NexGen management, including Travis McPherson. He is Senior VP Corporate Development for the company. Now, during today's webinar, he will provide an overview and outlook, and then we will take some of your questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. So during today's webinar, forward-looking statements may be made, and I would direct listeners to their forward-looking statements outlined on page 2 of the corporate presentation for NexGen. And this can be found on the company's website, nexgenenergy.ca. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. And we note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on NexGen Energy. So with that, I'd like to turn the stage over to Travis to speak about the uranium market and the company. So Travis.
Terrific. Yeah, thank you. And thanks, Red Cloud, for hosting us again. It's always fantastic to speak to you. So, yeah, we're talking about NexGen Energy today. And I will briefly talk about the market and some of the stuff that's going on in the uranium market on the demand side, supply side, and then we'll get into our strategic tier one asset, Arrow. So I'll go ahead to page 8 in the interest of time here. And we will talk about, as I said, the most recent kind of updates on the demand side. So, for a long time, and David and some of the Red Cloud people can attest, the narrative has been much more focused on the supply side and the challenges that are inherent there. And we'll talk about those in a moment. But over the last, 2-3 years, really, and really kind of like a snowball effect now, really picking up speed this year and month by month, has been this resurgence globally in nuclear power demand, for a number of reasons. One, obviously, clean baseload power source. Two, and more recently, has been energy security, particularly what's happening in Eastern Europe and Russia. And then 3, addressing energy poverty, which is a massive issue facing the world. And some of the new technologies, SMRs, small modular reactors, can really address that and are advancing quite quickly. But look, I actually just wrote down some notes on some of the things that have just happened over the last couple of months on the nuclear demand side. And I'm just going to read them, but it is quite incredible, particularly for those of us who have been in the industry for the past decade. And I'll kind of group them into policy, license extensions, and then small modular reactors. So on the policy side, probably one of the biggest ones really in decades has been this Inflation Reduction Act of 2022 that the U.S. passed. This is by far the most significant legislation supporting nuclear demand in the U.S. and probably globally, again, for decades, at least since the advent of nuclear really started. It includes production tax credits for the existing fleet. It includes tax incentives for advanced nuclear deployment. It includes $700 million for the creation of HALEU supply chain, which is required for the SMR deployment. $250 billion of loan guarantees for clean energy infrastructure projects and tax credits for new nuclear plants to be built, and clean hydrogen tax credits associated with nuclear. When you go to China's announced almost $500 billion spend over the next 15 years, 10 reactors every single year. So two of the biggest economies in the world, or the biggest economies in the world, are going full steam ahead on nuclear. In Europe, again, there's announcements coming almost daily in places like Poland, Finland, et cetera, with new nuclear build programs. France really doubling down on its existing fleet, and it's really been a bright shining spot in Europe, given that that heavy reliance on nuclear power. You have the UK as well. They're putting funding together for Sizewell C. In Japan, Japan is the new prime minister, relatively new prime minister. He wants to basically double the existing capacity by the summer of next year, which is really quite incredible because it's taken about a decade to get 10 reactors up, and then their policy, they want to get another 10 up and running over the next 8 months or so. The EU, also probably the biggest, one of the biggest announcements as well, was this inclusion of nuclear as clean, green, and safe in the European Union taxonomy framework. Massive for Europe, massive for the industry, and also, you've seen a number of other areas, including South Korea and Japan, point to that and say, well, look, the EU did this very broad science-based investigation into power sources and deemed nuclear to be green and safe. And so we're going to as well. So that's been fantastic. On the license extension side, Germany, Germany's announcing the extensions of 3 of their reactors that were set to close. Overwhelmingly a bad idea to close those reactors. So it's highly intelligent to keep those going, and it looks like they will, or at least they're going to for a period of time, and in all likelihood will continue to do that, and they're looking at that now. Japan has had this policy in place where reactors couldn't run past 60 years of lifespan. The U.S., as an example, accepts up to 90 years. Japan is looking to mimic the U.S. stance on the ages of reactors and extend that. Constellation, one of the largest utilities in the world and the largest in the U.S., has just announced a license extension for 2 conventional plants in Illinois. Diablo Canyon got a lifeline in California, and PG&E, the operator of that, is actually filing for an extension beyond 2030, which it already got extended to. And then South Korea, again, plans on building 4 new nuclear reactors and extending the life of 10 existing reactors all over this decade. And then on the SMR side, Canada has actually been doing a lot on this front. SaskPower is an example where our project sits in Saskatchewan. It has selected the site for the first SMR deployment in the province, which will likely happen later in this decade. Canada Infrastructure Bank funded or provided about $1 billion of funding in a package for small modular reactors to be built at the Darlington site. And TVA, the Tennessee Valley Authority, again, one of the larger U.S. utilities, is developing plans for 20 SMRs to be deployed. So really global demand is extremely robust, probably the most robust it's been, again, in many decades. Definitely more robust than last cycle, which was kind of, call it 2004 to 2011, when the uranium price went from $10 to $140 a pound. That was nowhere near as diversified and sustainable and robust of nuclear demand as we see today. And then, as I said, we'll touch on the supply side as well. And when you compare the world back in 2004 going into that cycle to today on the supply side, so the demand side, significantly more robust today than it was then. And then on the supply side, today is significantly more challenged, and I would say very much more unclear how the world is going to actually be able to supply itself with uranium, particularly post-2025, because of the impact of the last decade, which has really been just effectively zero incentive for anyone to do anything in the uranium business. Ourselves and a couple other groups, Fission, Denison, and a couple others, but not very many, were doing work over this period. But in terms of replacement of what's being produced, nowhere near the replacement rate over a decade. So we're sitting here today where all independent like UXC, Trade Tech, et cetera, all forecast massive growing deficits. We're in a deficit today and growing through to 2030. Some estimate, UXC has it at about 100 million pound annual deficit by the end of this decade. That's multiple new arrows. And again, we're going to talk about arrow, but that's multiple new arrows being brought online, being found, developed, funded, permitted, et cetera, constructed in a short period of time, like 10 years, it's not going to happen. So there's going to be extremely elevated uranium prices in our view for quite a period of time as the world tries to incentivize this supply to come online. But again, it has much more to do with the spending of capex than it does really the uranium price. Like, in other words, the uranium price could be $100 a pound tomorrow and stay there for a long period of time, and there's just a lag period between that incentive price being high and mines actually being brought online, because again, there just hasn't been exploration being done over the last decade. There hasn't been development of projects at all, outside of, again, a handful globally. So that's why we foresee that, and it's going to be a very exciting period of time. We feel very confident in that, and the good thing about Arrow is we're going to help to alleviate some of that over time, but in a very sustainable and responsible manner. So getting into Arrow and what we're developing, it is truly a strategic tier one asset. And we kind of define that across these three buckets: low cost. It'll be, bottom end of the cost curve on an all-in full cost basis. Environmentally elite. This will be, a gold standard for the world to look at and say that's how a mine should be designed and operate. All tailings, as an example, will go underground. Water recycling, the engagement efforts with all of the communities, indigenous and otherwise, in the area, has just set a new standard and something that everyone at the company really takes a lot of pride in working on this project because of those things. It's going to be a very long life asset. Frankly, we don't know how long it's going to be in operation, but we're permitting for a minimum of 24 years of operating life. And we'll talk about where we sit in the permitting process in a little bit. And then jurisdictionally, now this obviously has always been in our favor because Saskatchewan consistently ranks among the top one or two ranked mining jurisdictions globally. But now when you overlay what's happening with supply chains and geopolitics, and particularly in the nuclear fuel cycle and uranium, the front end of that in uranium, being in Saskatchewan and being in Canada and having an asset like this, the value is nowhere near fully understood today and will only grow over the coming years. This kind of elaborates on that fact. 71% of uranium production is from state-owned or controlled companies. 9% of it is from major diversified mining companies that frankly don't, like, it's a byproduct, generally speaking, or a very small part of their current business. So they're not really viewed as like a reliable, they're not looking to, Olympic Dam is a perfect example. Like, that mine produces some uranium, but it's tied entirely to copper fundamentals and the economics associated with that mine and copper more than it is uranium. So call it 85% is really from either groups that have their own strategic interests, like geopolitically, or don't really care about uranium specifically and the fundamentals inherent there. So a huge opportunity for NexGen. Our potential 30 million pounds of annual supply would equate to anywhere 15, 20, 25%, depending on how you look at supply over the next 5 to 6, 7 years. But it's going to be hugely strategically valuable. I'll skip through that and go to the feasibility study economics here. And again, we'll touch on where we sit with front-end engineering design and detailed engineering in a moment. But this is, again, truly unique. All these figures here you see are based on a mine life of 10.7 years, which is based on NI 43-101 guidelines, which we follow, and only rely on the measured and indicated resources as a result of that. But just within those first 11 years of mining, you can see these types of economics, like $3.5 to $4.5 billion at kind of current spot pricing. $1.3 billion of upfront capex pays itself back in 9, 10, 11 months, under a year. generates, in excess of $1 billion in after-tax net free cash flow. That brings us into the top 15 global mining companies by that basis. And all of that is from a 1,300 ton per day underground conventional mine in northern Saskatchewan with, again, really elite environmental designs and performance and huge support from local communities. In terms of some of the sensitivities here, this again speaks to the opportunity at hand and really the upside, I guess. But the last cycle, which again went from $10 to $140 a pound, the average contracted price during that period was about $75 US per pound. That's unadjusted for inflation. So today, call it $90 in today's dollars. Even at $75, you're talking about $2.5 billion in annual EBITDA. So every year, $2.5 billion being generated from this project. Again, for the reasons outlined earlier, that contracting price or that incentive price going into this next cycle has to be higher than it was last time because of the more demand coming from more places than last time and significantly less supply available to do that. We'll skip that one. This really kind of like summarizes why you see those characteristics that I outlined from the feasibility study, and also why we can have such an elite environmental mine. And it really relates to the fact that Arrow is contained entirely in this crystalline basement rock, that gray rock there. This is a cartoon, so all these projects are not side by side like this. This is just giving you kind of like an underground schematic of kind of the underground topography, call it, of these different deposits in the Athabasca Basin. So Arrow, again, entirely contained within the crystalline basement rock, and starts 100 meters from surface. That's something that has never been seen before in terms of that geological setting and technical setting, but also combined with the size and grade that we have, which is comparable to some of the existing mines in Canada. So that really is what enables us to have conventional mining, very clean metallurgy, able to put tailings all back underground because, again, it's in effectively granite rock, so it's very competent underground. So all of those things, it's all vertical in nature as well, so we can recover a significant amount of the resources. And the processing of the ore is quite conventional as well because it's monometallic and clean metallurgy, as I mentioned. So it really does, like Lee would always say, if starting the company, if you were kind of like getting tick boxes together and saying, what do we want this project to look like ideally? Frankly, you wouldn't have been able to add as many ticks to this because it never existed before and probably didn't think it was possible. So it's really just a freak deposit. Again, I've already touched on the fact that it's all conventional in nature, which is excellent. This is actually what the project will look like at surface there. This is renderings from the feasibility study, not a cartoon. And as you can see, this is, a very small footprint. It will take up less than 1 square mile in total surface footprint. So, where the Blue Jays play, you can put that stadium on there and that's the total surface impact. So very minimal surface impact. Even today, if you go up to site, you'll see that's our approach from day one is minimize the impact at every single step. Only move one tree if you have to, reclimate immediately, and really embody what we talk about day to day now so that when we go into the next phases, it's all inherent with everybody at the company. I can tell you it is. Exploration. So what I just showed you and talked about with Arrow is just one of, and trust me, it's a great one, but it is one of multiple mineralized occurrences and discoveries. But also just on one of the corridors. These green lines you see here are effectively big conductor corridors, so big cracks in the ground, regional structural cracks in the ground, all of which have the same prospectivity as the Patterson corridor, which you can see up towards the top left. All those stars, those yellow stars there, are the discoveries that we've made, and then the one just to the outside of that little point on our tenement boundary there, that's Fission's deposit. But all of that is on that one corridor, the Patterson corridor. I might also add this green squiggle. I know you can't see my mouse, but there's kind of a green squiggle that goes perpendicular to all the more neon green corridors. That is the edge of the Athabasca boundary. So that's where the Athabasca Basin, so that sandstone, comes up to surface. And so, as an example with Arrow, in some parts of Arrow we have 5 to 10 meters of Athabasca sandstone. On some parts of Arrow we don't have any Athabasca sandstone because it literally is right on that border. We are last year we started exploring regional exploration again for the first time in 4 or 5 years. Prior to that, it was just very focused on Arrow. We did do some exploration, but we really needed all hands on deck at Arrow, delineating the deposit, doing all the baseline work and environmental work and everything else, the engineering. Last year, we started to get back to regional exploration in a balanced, systematic way. We made some discoveries, most notably below Arrow, actually, because there's always been a theory, and deep geophysics has validated that theory, that there's potentially repetitions of Arrow at depth. We'd never drilled well below Arrow. We drilled down about a 900 plus meters in drill holes defining Arrow, and those effectively ended in uranium, but we hadn't kind of stepped out below Arrow. We did that last year with 3 1,500 meter holes, and they hit mineralization, little bits of mineralization. But as we say, like, if you took the first drill hole at Arrow and took these first holes, these look significantly better than that. So it has confirmed the theory. Now, because of the depth of those holes, we won't actually get back there probably from surface. It's not the most efficient way to delineate it. But once we get underground, we will delineate that area in the future. And then we're also going to start to step southeast here to Dirksen West, Dirksen Corridor, Dirksen East. Those are also areas of very high prospectivity. And then we're also covering more of the project in final layers of the latest geophysical data sets to enable greater optionality into the future in terms of drill programs. But what we're looking for is more arrows. We're not kind of like trying to marginally grow Arrow or anything else, really. The focus is we're very statistically and just when you look at it, there's too many great looking targets for there not to be other Arrow type deposits there in our view. So we're going to go about systematically testing that. We don't know when we'll find one or if we will, but we're confident in our team, confident in our processes, and so we're confident that we will. In terms of sustainability, anyone that knows this company knows that from the beginning, this has been an absolute pillar of what we do. It's embedded in everything we. All the decisions that are made at the company are made through the lens of environmental eliteness, community advancement with the local communities, and indigenous knowledge and everything else. We're about to publish our second sustainability report imminently, so please look out for that. But it is really a great window into how we are doing what I just said we're doing, which is having all of our decisions being made through this lens, both inherently, like I can tell you everyone at the company is very passionate about this and it is inherent in them, but also formally through policies and procedures that we have in place to do it. This, again, we've already talked on it, but this is a new standard globally for environmental mine management. This underground tailings management facility comes at a cost. Yeah, it comes at a cost, both CapEx, sustaining capital, operating cost wise, but it's absolutely the right thing to do. We can do it in because of that technical setting we're in, and again, having no surface tailings. I mean, that is the dream, and that's the dream that we're bringing to reality here. These are the pillars of our community programs, which again date back to, prior to drilling the first drill hole, frankly, back in 2013. But they cover a lot of different aspects: education, health and wellness, and economic capacity building. This has been a very natural evolution of the company and something that's been very organic and genuine. It covers feeding all the kids, all the students in 3 schools in La Loche, all 3 schools in La Loche, breakfast every day, about 1,150 students. Summer student programs, which brings kids up, shows them that there's lots of opportunity in mining or peripheral to mining. And then that actually spawned then a bursary program where we fund really, really excellent students and people as they go through secondary education programs. There's been 6 so far that have been provided these bursaries in a variety of things, including geology, human resources, environmental sciences. So that it doesn't just cover specific mining things, it covers a broad base. Ideally, these people, because they're great people, come back and work for us, but if they don't, we're happy. We just want them going out in the world and having been impacted and mentored by the people at NexGen as they go forward. We do have a series of documentary videos on our website, short documentary videos, like 4 or 5 minutes. Please go to our website, www.nexgenenergy.ca, and check those out. But it really gives a great window into everything I've tried to outline here. In terms of the priorities and what we're up to, so we have just completed. So earlier this year, we've had a big milestone. We submitted our environmental impact statement. We completed that back in June. That kicked off a 90-day public comment period that closed in mid-October. It also kicked off a technical review by the Ministry of Environment in the province of Saskatchewan and one done by the Canadian Nuclear Safety Commission federally. We have received the technical comments back from the province as well as some of the public comments. And in mid-November, so in 10 days from now or so, we will have all final comments in hand. To date, there's been nothing that's been, I would say, material technically, in the sense like nothing that would indicate that we would have to go back on the ground and do work or anything. But we will address comments and work with the CNSC in the province to address those comments over the coming months. Once those have been completed, then we'll have a final EIS, it's called. And once that's done and all those comments are addressed adequately and everyone's, ourselves, CNSC, Ministry of Environment are all satisfied, then the final step really is a commission hearing where the project will get approved. And that's something that we're very much looking forward to. We don't know exact date yet, but we will over the coming months, we think, and we'll keep everyone abreast. But we really are. The key takeaway is, everything's gone in line with our expectations. I think our efforts that we've done, which has been probably a little bit different than some other mining companies, where our focus has been to really try to address and give buy-in to our philosophies as a company, why we did certain things, why we interpreted things a certain way, enable feedback as we developed the EIS, so that once we submitted the EIS, everybody, all the stakeholders were already well aware of why things were in there and what they meant, so that we could really try to minimize the post-submission review timelines. And so far, that seems to be having worked very well. And we'll have more on that over the coming months, but very exciting. And we really are at the back half or back quarter really of that process. As I said, the sustainability report will be coming out imminently. Feed front-end engineering design. So we kind of have our permitting track. We have our exploration track, which you talked about already. And then we have our project development track, which incorporates final detailed engineering, procurement, and project execution. Those are all going very well, all in line with expectations, in line with the company's philosophies, and all really around optimizations. Like there's nothing being reevaluated fundamentally from the feasibility study. Everything in that feasibility study remains true materially. All we're doing is optimizing. We're either optimizing for environmental performance more, we're optimizing for the schedule or costs or anything. And so we're really just looking to tweak and optimize, and that's all going really well, a really contestable process. We've got a NexGen person responsible for all aspects of everything. Like not one person, we've got people in each of these spots, making sure that we oversee everything. So it's not, a conventional EPCM contract where, we just, okay, tell us when it's done. This is owned by us and really an integrated team, which is working extraordinarily well. There's another track, which is kind of within the permitting track, which is licensing. We will submit all of our we've already submitted a number of license packages. We will complete all of those license submissions by the end of this year as well. And then we're going to kick off detailed engineering, which is really just kind of like the next phase of front-end engineering design. Or in other words, I guess front-end engineering design is really the beginning of detailed engineering. We'll continue that. And those are really around, the critical path items on the schedule. So things related to the shaft sinking. But we'll effectively be in a position to start shaft sinking, mid to call it Q3 next year, pending obviously our approvals. We're working on the funding package for this project as well. What I would say is that has never been high risk or a risk really at all in anyone's view at our company, given the economics, given the approach, given the data quality that we have, and everything. But what's really transpired over the last year particularly has been, I would say, the avenues or options for us to fund it have opened up even more. And what that will do is obviously provide a better opportunity to even optimize that package further. And then, we had about $160 million as of Q2. Our Q3s will come out in the next week. So that'll get updated and it will be less than that. But we still have, a very good, strong cash balance, cash position. We're trading a lot of dollar volume. Good liquidity, majority now coming from the US. We are listed on the ASX as well, and that's somewhere that's obviously a huge opportunity for us and the uranium sector really. They're pretty isolated on the ASX in terms of what they can invest in, which are certain ASX listed companies with certain liquidity requirements. And in uranium, it doesn't provide a lot. So you get a lot of money flowing into very few companies and creating these great valuations. So that's something that we're focused on as well. We've already got, really good support down there, some good shareholders down there, but that's a focus, just like the New York Stock Exchange was. And as I said, now represents, probably on average 2/3 of global volumes. Whereas, 5 years ago is maybe, or 4 years ago is maybe 10, 20%. So, it comes, we work these markets and ensure that liquidity builds. We've got an outstanding shareholder base, CEF Holdings, Leica, Shings Group, Queens Road Capital, Mega Uranium, and then Segra guys and others, Sagem Cove, etc. We've got a really great shareholder base that really understands the opportunity at hand here. So I will stop there and provide some time for any questions that anyone may have.
Great. Thank you very much, Travis. Great presentation as always. So we're now going to kick off the Q&A portion of the webinar. So please, reminder to everybody online, you can put your questions into the chat box and we'll get to as many as we can. So I guess starting on some of the generalist questions here, do you think that the governments of the world have finally got it? That nuclear is really an important part of the clean energy mix? Or has really recent attention been largely to do with energy requirements and security of supply, if you will, especially given the events in the Ukraine?
No, I would say it probably got, I think it started with COVID, coming out of COVID. There was a lot of strong support from existing nuclear players and also the likes of China and some of the big developing countries that really said, like, yeah, we hear you. Like, we don't want to go back to polluting the earth. Like, let's try to shift. And look, we can all have opinions on whether that's going well or not well. But the point is that there was strong policy, either decisions made or policies being developed at that time. And then really with the advent of this war, it really doubled the necessity for that again. So no, I would say, like, I guess the question really is asking, like, if the war ends, like, does it just mean this support goes away? No, definitely not the view that we would have. And also these policies and things that are being enacted really have long tails to them. Like, if you start supporting a nuclear fleet for new builds or SMRs, as an example, and a war ends, you can't just turn those things off. Like, there's, long supply chains that are being developed and plans and money being spent. So, and again, like, the reality is, and I think this is well understood now, or better understood, I guess I should say, among policymakers, that, there are only so many options for baseload power. And, they are, and call it like everywhere in the world, like hydro is an option in some places, not others. And geothermal is an option in some places, but not others. But if you look at kind of like what can go out to the world, it's coal, which is still the vast majority of power requirements are coal, gas, which is better than coal, or nuclear. And nuclear is obviously the best. Nuclear has probably the worst perception, but the best science and stats behind it. And that perception is waning because of the fact that everyone is now very well aware, and Germany's been a poster child for this, that, if you go anti-nuclear, you're really going pro-coal. And that's not really a great, I think everyone's in agreement that coal is bad. The discussions are around, well, how do we address that? And again, I think this nuclear element, is nuclear going to be 100% of the grid anywhere? No, it's not. But they're definitely going to support it where the existing fleets currently exist. And then they're going to keep developing them into a diversified mix to wane off of coal over time.
Right. And you did mention the green energy taxonomy tag for nuclear in the EU. Have you noticed more investor attention from Europe following that news earlier this year, or even, I think it was last year when it was first proposed?
Yeah, definitely we have, and kind of goes to what I was talking about, the funding package as well. Like, I would say investors, yes, lenders for like a project financing package for a project like this. That's grown. Even people that were already in the industry that kind of were unclear on the direction, now have, because of that and the other things that I mentioned, have this huge confidence now that the world's going to need a lot of uranium in the future, which I think was always known, but it was kind of like, well, how much, and, this and that. Now it's like, okay, everyone understands the support is there for these reactor fleets. Everyone knew there's big builds coming in China and India and other places, but there's kind of like a period where it was like, well, if, the U.S. keeps closing plants, does that create like a gap period between that and when these new nuclear plants get developed, or SMRs? And now, because of what you're seeing the, like, where it was forecasted to be a gap is now being filled in this demand. So the supply deficit's even bigger.
Yeah. And then you have your new ASX listing as well. So your dual ASX, TSX. So has the residency of your shareholder mix changed at all with this news in Europe and this new ASX listing? Is it improved your liquidity?
Yeah, it's definitely improved the liquidity for sure. And in the US particularly, which is always a good sign, because it's a lot more, generalist type money, which means they're more focused on kind of these macro type shifts as opposed to, just a great mining project, which we love. We love the fact that people are in it for the macro as well as the micro, because this, like, our ESG story, as an example, is industry leading for all the reasons I outlined in this presentation. But the industry, the uranium mining industry as a whole, should be a poster child for ESG investors. Both because they're generally very small mines, small carbon footprint, small water use, et cetera, particularly the ones in Canada. And then they're creating this incredibly dense, clean energy source, which really can impact, power tens of millions of homes and take off. We have it in our presentation. I skipped over it, but the industry does take out of the world 500 million car equivalents of CO2 every year, the uranium mining industry. So there's nothing like that on the planet.
Right. Okay. And I guess last question before we get to the project here, and I've asked you this before, but the winds of change are quick these days. Do you see Australia moving towards nuclear power at all? Or is the country just becoming more accepting of uranium production and investment?
No, I would say, and look, Lee, being from there originally, has a good pulse on it. He said, like, in his history, he's never seen it like this. It's been pretty pro uranium mining development, particularly in obviously some jurisdictions down there, but it's generally been quite in opposition to nuclear power. That's changing. Do I think, like, over the next 2 years there's going to be nuclear power plants built in Australia? Probably not, but I think to your point, the winds are changing direction down there. And again, it makes a hell of a lot of sense for them. They've already got a huge resource of uranium there. They have a long history of it. They're building nuclear powered submarines. They've got micro reactors to create isotopes already. They got waste repositories in the country. So they kind of got most of the infrastructure there. And then they have in some of the states, like, very, very severe power challenges. Whether it's conventional or it's these small modular reactors, probably small modular reactors, it makes a hell of a lot of sense. And I do think the winds are changing there, but it will take time. But it feels that way for sure.
Okay. Well, let's move on to Arrow, which is, in my opinion, the best uranium deposit in the world. And these deposits in the Athabasca Basin rarely occur alone. This year, you guys finally stepped out on your explorations, essentially looking for another large deposit, perhaps a discovery that would move the needle. Do you plan to continue with that strategy in the coming year?
Yes. Yeah, we're going to continue. We're planning and undergoing the final preparations for an expanded program in 2023 from what we did in this year. But yeah, it's going to be a balance. Like, the vast majority of spending and focus is still on Arrow and Arrow's development, obviously. But, call it 10, 15% of focus and everything will probably be on regional exploration. And I think that kind of mix will probably continue into the future, that order of magnitude. Obviously, once we start spending $1.3 billion, it won't be 10% of that. But yeah.
Yeah. Was there anything that you drilled this year that really says you need to go back and test that other structure again?
Yeah, and we'll have results. But yeah, no, there was lots of very interesting stuff that we found, structures, etc. Obviously, we didn't make any new big discoveries, but that's not the expectation on kind of first pass regional exploration like this. We did have success last year with that, again, below Arrow and Camp East. But no, yeah, again, we're planning an expanded program next year. I think that tells you everything. We're very encouraged by what we're seeing, and it definitely warrants follow-up.
Great. Okay. Can you discuss maybe how you plan to make Arrow, as you say, an environmentally elite mine? You mentioned, tailings underground and water recycling. What are some of your main key ideas, and how have these helped with your permitting or your social license?
I think those are two key ones for sure. Underground tailings management facility, again, never been done anywhere in the world like that, where 100% of it goes back underground. And again, the goodwill that it's built in doing that, because we didn't have to propose that. We easily could have. It's not like there's some moratorium on surface tailings or something like that. We looked at all the options, thought it was a good option, and brought it to our stakeholders and got huge buy-in for it. But again, it does come at a significant cost to us. So, it does demonstrate the genuineness of our environmental approach to this mine. Like, we're not, if anyone thinks like, oh, this is just another company that's trying to juice it up to sell it one day, like, that should tell you everything you need to know, that that's not what we're doing. This is everything we publish, all the decisions that are made are on the basis that we're building and operating this mine in the way that we think will be industry leading from an environmental performance standpoint. Underground tailings management facility being key to that, but everything we look at, the power requirements, how do we fill those to minimize carbon footprint? Again, water recycling, engagement, so the employment, the training programs that we have in place and have had in place for a very long time, how those will formalize and expand. I think it's about 90% plus of the employment that this mine will create can be trained either on job or through technical institutes in northern Saskatchewan. So we can have, and we have a big population in the local communities. Now these are 150, the closest one's 150 kilometers away. So, but it is relatively close. It's kind of actually the perfect distance, frankly. But it pools of capital, human capital there that we've been working with for a long time. Kids that are now young adults that are going to be coming into their professional careers. Well, they have a great experience with us, getting trained and everything else, educated, and so that's something that we're very, very focused on, as I said, and the underground tailings management, water recycling, carbon emissions, training. These are all elements of it, but it's really every single nook and cranny we've looked at it through that lens. And there's lots more examples, but those are really the key ones.
Yeah, and what sort of carbon footprint will the mine have, and what can you do to offset that carbon footprint?
Well, it's already, 1,300 tons per day. It's already quite small, very, very small. Our sustainability report has the numbers in there, but it's extremely low impact from really every metric, including carbon emissions in the mining, relative to the mining industry. But we can look at, one thing we looked at was LNG, utilizing LNG to power it, because actually the grid, there's a couple of challenges. One, the grid in the area is pretty challenged as is, so tying into the grid wasn't really viable. There is some other options further away, which we are evaluating, but also the reality is in that area, it's a lot of coal generation with how the grid is powered. So LNG was actually lower carbon emissions than that was, or obviously diesel generators would be. So that's another example of how we're minimizing that overall impact and footprint.
Right. Okay. Now, total capex $1.3 billion, but it's a really quick payback, and I believe that's with lower uranium prices than we have today at spot. Does that influence how you plan to finance the project?
The payback?
Yeah. Well, yeah, just the fact that you have a quick payback. Does that influence how much debt or equity you want to use?
Yeah, it definitely opens up the capacity for more debt to be utilized, for sure. And again, the payback, which is a consequence of the margins that we have. Like you're talking about, probably on average in excess of $3,000 per ton rock value, and then the extraction all up is hundreds of dollars a ton. So 90+% operating margins, which mean, even if you're a lender that's suspect or has a neutral to bearish view on uranium, you could still say, okay, well, let's run the math and see how much debt we could give these guys if we assume $25 uranium prices indefinitely into the future. And because of those margins and the paybacks as a result of that, it still warrants a huge debt coverage. So it's an extremely financeable project from a debt perspective. Like, it's really ideal. And then when you start to overlay the fact that nuclear is a lot more accepted and viewed as green, you look at jurisdictional considerations, the fact it's in Canada, and Canada is, put uranium on its critical minerals list for the first time ever. And there's a lot of support to friendshore, as the Deputy Prime Minister has termed it, with the U.S. in particular. The U.S. consumes, almost 50 million pounds every year, produces none effectively. Doesn't really have major capacity to grow that. They can grow it a bit. They need a lot of higher prices. They can grow it a bit, but maybe 10 to 15% of that consumption they could get to. But they have to rely on imports quite heavily, and Canada is ideal. And we've done a lot of work in DC to make sure that they're aware of the fact there's something to fight for here. Because when we first went there, frankly, they said, well, yeah, well, what's Canada going to do? Like, you guys are shutting mines too. You have the same problem we have where you can't compete with Kazakhstan and Russia. And we said, well, first of all, we're not interested in competing with anyone. But two, this project, these are the characteristics of it. And this really solves a lot of problems in the U.S. As it relates to that supply chain. So that just keeps opening up more avenues for capital, whether it's, again, conventional project financing or whether it's kind of more bespoke, whether you're talking about export credit agencies or grant money or government kind of programs to support this type of strategic project. It's all opening up a lot more than it has in the past.
How about offtakes? Is that something you might need to look at or want to look at?
At a certain time, we will want to look at those. We are looking at them, to be clear. We're engaging regularly. We could have signed offtakes in the past, but number one, the stage of the project right now, there's no need to sign anything today. It wouldn't benefit us at all to do it today, just if you're looking at the development of the project and the timelines. But also, we're very, very confident where this cycle is going. And so, what is an offtake contract? Well, it's a hedge. You're hedging your production. There are ways which for us, the contracts that we would be interested in are effectively volume contracts where the pricing is spot with a premium for the jurisdiction at the time of delivery. But anything that has tight collars or fixed prices, just again, to us, it would be similar to if you were talking to like an oil executive 2 years ago who was saying they were going to hedge all their production at $40 oil, and then we're in this world today, like not a good choice. And then technically we don't have to, or there's no benefit to us in doing it because we have that very low all-in sustaining cost, like $10 all-in sustaining cost. So, if we had a lot of technical risk around our project, technical uncertainty, or we had higher costs as a result of that or otherwise, it might make more sense to sign, fixed price contracts or collared contracts. But, and this is a big myth too. Like people, I think it's black or white. Like it's either those contracts or it's spot and you're just flooding the market in spot. Like we've always said, like, we're not the group that's going to flood the market. Like we've demonstrated what the project's capable of in terms of production volumes. We're never going to fund it in a way or contract in a way that forces us to produce those levels, which has been the case in the past. That's not us. We're very commercially minded. We think the industry has a lot of opportunity to kind of evolve here, and this asset enables us to kind of push the industry in that evolution, in our view. And so that's something we're going to focus on doing. We don't know how the dust is going to settle exactly at the end of the day, but I think that's best for everyone in the industry, ourselves, the utilities, all the other suppliers, because, you step back, why was the last 10 years so bad? Well, it was so bad because the suppliers didn't adjust quickly enough to the change in demand. Like Fukushima happened, huge cratering in global demand. Supply kept oversupplying. Why? Well, because they had all these contracts that were at higher prices that made them keep producing. If you got rid of those, or you tied those to spot prices, or you shortened the duration of those contracts, that market would have rebalanced a long time ago and wouldn't have resulted in that whole thing being 10 years. And that's what we're interested in doing and seeing. How that exactly works, we'll find out and we'll participate in and try to lead. But that's what we're really focused on, is making sure that it's a sustainable industry for everybody.
Right. Okay. Yeah. Now you mentioned you don't have technical uncertainty, but project optimization is a focus here. So should we assume that nothing material will change between now and construction? And, do you plan to increase your measured indicated resources such that, you might be able to pad the economics on the feasibility study, extend your life of mine?
It's kind of so the latter part of your question, that's kind of like an inevitability. Like, again, what investors see, and we understand that NI 43-101 is the feasibility study. But what we see is what we're permitting for, really, which is that 24-year mine life. And that's kind of the project to us internally. Obviously, it's not NI 43-101 compliant, so we can't really talk about it. But so, the inferred resources, as an example, about 80 million pounds currently sitting there. That's, we're confident where that will go if the past holds true, which is high conversion of inferred to indicated. So, yeah, at some point we will do that. When that is, it economically makes the most sense to do it from underground once we sink the shafts. And so that's probably when you'll see it. And then what was the first part of that question, David? Sorry.
The first part of the question, sorry, forgive me, my just the the optimization. I'm assuming nothing's going to change material.
No, nothing material. All kind of tweaks and optimizations related to the feasibility study, like materially and in principle, exact same project that you see in the feasibility study is what's going to be built. Again, tweaks, optimizations, etc., but the same thing.
Yeah. Okay, and you did talk a fair bit about permitting and what we should expect, EIS filing coming up. Can you say anything else about maybe permitting, construction timelines, maybe initial production forecast date?
Yeah, again, we don't so there's parts that we can influence and there's parts that we can control. We're leaving the part that we control. Once we respond to these comments over the next couple of months and we have that final EIS, then it's outside of our control. We have no more work to be done effectively on our side. Now it's up to the government to really do its job, and we can influence that and work with them. And we have been, and we have a very good professional working relationship with all of our stakeholders. But we can influence it. We can't control it. But I think our view is over the coming months and once we address the comments, which, all things being equal, say we do that and we have a final EIS in Q1 of next year. I think at that same time, we'll have a commission hearing date scheduled publicly. That will be the approval date, and then we can work backwards from there. But assuming, say, that's at, there's no reason why that couldn't be at the end of next year, as an example. All things being equal, again, we don't know exactly, but say that that's very possible. And there's, again, no reason why it couldn't be. If that's the case, well, then we're in production in 2027.
Okay.
But again, we'll be able to define that a lot more over the coming months and everything else. And we do have some more permitting processes to go through, but that's entirely possible. And in other words, if you take away the permits and just say we have our permits, when could you get into production? It's probably, early 2027.
Yeah, that's an estimate. It's not guidance. So.
Correct.
Yeah. Okay. The regulatory process is challenging in Canada. Are there any changes that you can ask for to help, fast track the approval process? You said you can influence this procedure.
I think where there is some room for, again, like to the extent that the Deputy Prime Minister, which I think we have to assume is sincere in those comments, Minister Wilkinson, saying similar comments, like, if the government is sincere about wanting to friendshore, wanting to develop critical projects to sustain, supply chains and get off of, Russian-controlled supply chains of anything, whether it's gas, nuclear fuel cycle, et cetera, then where they can really influence that and kind of call it fast track or optimize it is between final EIS and when that commission hearing is actually scheduled. Because there's not a lot of work that has to be done. You have to prepare and everything for the commission hearing, but like the vast majority of the work's already been done. All the comments are addressed now. So it's really kind of like just formalizing that and having commission hearings. So, whereas, if you take yourself out of the world I just described, maybe there's not as much of an impetus and maybe it's a longer timeline. Like maybe it's a year after you submit final EIS to when that commission hearing is. But maybe in this world, and again, if they're sincere, maybe they bring it forward substantially because they say, well, there's no reason we can't. And we are sincere about doing that. So that's an area that can do it. But I think that also speaks to how advanced we are in the permitting process. Is there's not really that much left. Like we have to get our approvals. That's a big one. But in terms of work, like all the work's been done. All the uncertainty's been, and the last bit of any uncertainty remaining It will be addressed through these public comment period, addressing all the public comments that have come in now, and that period's now closed. So, we'll be in a very good position early next year to know when exactly that date is, I think.
Yeah. Okay. Any need to bring in a major partner here, or your plans are to go it alone? And I think you've indicated that by your actions over the last several years.
Yeah. I think like for us, the plan, as I said, every decision we make, every decision we've made to date, and every decision going forward is on the basis we're doing this alone. And to the extent a partner comes and wants to get involved, we'll just have to assess it and see how it makes the result better for us and our stakeholders and shareholders at the end of it than that standalone track. So, no plans or anything to do it, but we're constantly assessing, and over this financing period, like this is kind of the window to see, is there an opportunity to partner that makes any sense? Obviously we haven't seen it yet. We don't think so, but we'll find out over the coming kind of year.
Yeah. Okay. So with Arrow, approaching production and your regional exploration still relatively close to home, have you looked or considered looking further afield? Picking up some other earlier stage projects? And I know you already have that equity interest in ISO Energy. Maybe how does that fit in your strategy?
Yeah. So in terms of like other ground, like we've got 200,000 hectares of the most prospective ground in the Athabasca Basin that's under drilled. So like we constantly look at everything, but we haven't seen anything that like we can keep ourselves very busy with what we have. And if we just looked at it and said, if you ignored what ownership was and just said that we could stake anything, what would we want? This is what we would want. This is the land that we would want. So we already have that. And then in terms of ISO Energy, we were a very supportive shareholder. We think it's one of the best projects outside of Arrow. 50 million pounds at 30% U3O8 at that depth.
Highest grade in the world.
Yeah, in the Eastern Athabasca Basin as well, where they have mills that some decisions are going to have to be made. Either they have to keep feeding them with ore from somewhere, or they have to start reclamating them, which is very costly. So. I think there's some strategic value there. We are very happy with our ownership in it for a number of reasons. But, we kind of have what we have in Arrow, which is fantastic. And then, with ISO, we kind of control that part as well. So, we're happy with it.
Okay. We're up over the hour, so maybe just a couple of very quick questions on, what's your cash balance right now, and do you have any options or warrants that are in the money? And if so, how much might that bring in?
We don't have any warrants outstanding at all. And then stock options, it's minimal. Like we have stock options, but the money that comes in is minimal. From those, I mean, a little bit does and will, but not much. And then we have, as I said, about $160 million as of Q2. So it's probably, $130, $140 million today. But again, the Q3 financials will come out soon. In a very strong financial cash position.
Great. Okay. And then just to leave us here, sort of a loaded question, taking everything into account, do you consider your shares undervalued?
Yeah, extremely. I mean, look, for us, we kind of like flash ahead into the future. What's a company worth that generates $2.5 billion in annual EBITDA? Well, that is a top 10 global mining company. Go to the 10th biggest company, the 10th company on that list and see how big it is. It's very, very large. And then particularly when you overlay the fact this is coming from one mine in Canada, 1,300 tons per day, with underground tailings management, no legacy issues, like it's a very valuable company. We're not there today, we understand that, but the gap between that and this is enormous, and that is the opportunity at hand. And I think, people can get lost looking at like the NPV of a project or whatever, but if you just kind of like flash ahead to the future, what it's going to be worth, and look at risk adjusting that back to today, we're really advanced through permitting. Financing is not going to be a problem, and it's a conventional, simple little underground mine. up in a great area to build a mine with a lot of labor availability and capacity. We're very, very excited. There's nothing that keeps us up at night except for the health and safety of our people every day.
Yeah, perfect. Okay, no, great story. Thank you very much for talking with us today, Travis.
Thanks, David, and thanks Red Cloud for hosting us. It's fantastic and always excellent. So yeah, really appreciate it. Thank you.
Great. Well, thank you everybody else for tuning in. A reminder that Red Cloud Securities will be back with another webinar tomorrow. Kobe is going to sit down with ePower Resources. That's November 3rd at 2 p.m. Eastern. Have a great day, everyone. Thank you.